Hey Brent, how's it going?
Hey, I'm okay. How are you?
Good, good, good. Just working away, my man.
Good.
How's 2025 treating you?
It's all right. Was down in Miami for the CREFC conference. Got back yesterday, and now we're just working hard to get some deals signed up.
Krefski,
CREFC, the Miami CREF conference.
Miami Cref Conference. Let's look that up.
It's about there's like probably I bet there were 4,000 people there.
That's a ton of people, man. I'm on the West Coast, so that's like I'm gonna make a vacation out of that one if I ever go.
Well, it's like when I go to MBA in a couple weeks. It's the same thing. It's like travel all the way across the country. This is nice for me because it's the same time zone. So.
Yeah, yeah, no, totally, totally. So what's new, Brent? Is there anything new with Bloomfield, with I don't know, the markets, how things are looking, how you guys are shaping your lending patterns? Tell us a little bit about what's going on with you.
Yeah, I mean, we've been doing more of the same. So kind of $3 to $30 million bridge. I mean, we're seeing opportunities now, what we think are strong opportunities to come in and take out banks, where banks are like, hey, you're not fully leased, you're not fully stabilized, and I need you off the books. And so we can step in and provide that true interim capital. So that's been good. Doing some owner-occupied industrial, that's been keeping us busy. Lots of hospitality, senior living, skilled nursing, assets that have kind of more of a operating component to them, and banks get a little scared of that if they're not right on track. And so, we've been doing some deals where we've been able to help borrowers step in at a discount to what replacement value or cost, and even what we think market value is on assets that take some operational turnaround.
Right.
And that's been good for us.
So you still need a real crystal clear exit strategy. So you have somebody who's not 100% leased up, maturing note, whatever. You're still going to take those guys out, but there has to be clear indication of upping. Those rents are clearly going to be upped, and it's going to happen for them.
Either rents or occupancy, depending on what the asset type is. But yeah, yeah,
Right
or
on, right on.
construction completion. I mean, there's also deals that we're starting to see more apartment deals that are, 80%, 90% finished, or, they had COVID hiccups and now the banks are like, you're gone, we don't want you anymore. Or bank A buys bank B, and bank B has a bunch of real estate on the book, loans on the books. And those really aren't the clients anymore for that tenant or for that lender. And so, so the borrower is like, hey, I need to get taken out now. I just need another 6, 12, 18 months before I can get this thing fully constructed and get the tenants in place and people paying. Like I've got one up closer to your neck of the woods right now in Washington State, where outside Vancouver, basically the borrower built a hotel, they had cost overruns, and so now they need to kind of pay some back due stuff. And they came to me and said, I want X, and I said, that's great, but I just can't get there. And so then they came back to me and said, well, we raised a little bit more money. Would you do it at X minus, $1 million or $2 million? And I was like, that makes more sense. So.
Mhm. Do you ever see equity funds approaching you for financing or any of the representatives approaching you for financing? Because a lot of
Yeah.
those guys, they're doing these, value add acquisitions for these, amazing returns for their investors. But, half of that money that investors are putting in is going towards debt, I would imagine. So, is that one of the categories of clients that you see a lot of?
Yep, absolutely. Yep, we do a lot of that. Deals where we did two or three deals in the last probably 18 months with private equity funds. Actually, probably more than that even.
Yeah.
Maybe half a dozen. Where private equity funds had bank. I mean, we did one deal where really well-heeled sponsor fund. I mean, it was $1 billion fund, and First Republic was their bank, got taken over by Chase, and they're like, they just won't advance any more money to us. And so we kind of took out, recapitalized, and that was actually on Creative Office. So we'll do some deals that, others may not if we like the business plan and the story.
Who brought you that deal, that equity fund deal? Do you remember?
That deal, a broker brought me that.
A broker? A
Yep, that was
commercial
a
loan
broker.
broker, or is this someone who was already kind of working internally at the fund, kind of
Nope,
acting as
nope, that was an external loan broker. That's how we
right
get
on?
not, like that's how we get 95% of our business.
Right, right. And that's exactly why we have our program is to give brokers the resources, the knowledge to place these loans, And it's like a big hidden industry. Many people don't know about brokering private money loans or how that even works or how the capital markets work and how involved you can actually get with like minimal licensing. So that's fantastic.
Yeah, for sure.
Well, let's jump into your Excel sheet, make sure we're in line, and then we'll let you go.
All right, cool.
Awesome, brother. So can you see my screen?
Yes, I can.
Okay,
I'm going
perfect.
to turn my
So
phone
this
side.
is this is our lender buckets Excel sheet. You've already seen this a lot of times, Brent, but for those people who haven't seen it, our lender buckets, this is how I explain how I categorize loans that come into me and how I end up placing them. As you can see, we got several buckets. We have our 1 to 4 fix and flip ground up. We have our 1 to 4 and multifamily perm loans. We have straight up ground up construction, commercial bridge, small balance perm. We have a couple of SBA lenders. We have specialty financing, which I believe Bloomfield is in that commercial specialty bucket where you have some equity stuff. You finish up on some of the, you help with the completion of projects. You do some mezz, but ideally, I mean, frankly, you're straight up bridge if you ask me. But I think we have you in the bridge. We have large balance perm, and then we have a couple of probing sheets where if we have lenders and we haven't really established our own fundings with them, or we haven't seen that they may or may not be legit, we have a probing section where people can kind of probe on lenders we haven't put in the bucket sheet. So, anyways, these are all scrubbed lenders, 100% scrubbed, meaning we know for a fact they are private money lenders. We've vetted them and we've added them to our lender bucket sheet. So this is where we place our loans. So you're in our specialty. We have you in the commercial bridge. Let's go through each one of these sections and just make sure we're still up to date because we do this on every call. So obviously, your contact information is still good. Why send you the deal? This right here is pretty simple. I want something a little bit expanded on this. Obviously, we have distressed assets, second position, sometimes needed and non-recourse. But ideally, is there anything else that our brokers can just see and just say, hey, this is a deal for you?
Yeah, anything that's quick close, we reserve the right, but we typically don't order appraisals on our deals or third-party appraisals. So we can move quickly on transactions. We also end up facilitating a lot of discounted payoffs. So that's kind of, I would say in the or auction purchases. So that's where I would say kind of the distressed. It may be a great deal, but it's kind of a distressed situation. It may be great real estate, but it's just a distressed situation. So
That's
that's where we
fantastic.
can be. That's where we can be fast.
That's fantastic. Biggest hang up. I think this is a huge hang up for people is they just don't have the right planning when they find a distressed asset. They don't have the right
Mhm.
planning, the performance in place. They want to make a move, but it's like, hey, you need to have a strong exit. So that's what we have as your biggest hang up. Are there any other major hang ups like upfront costs or anything that we should note just so brokers know how to set proper expectations?
No, I mean, I would say that in our world, most every deal requires an upfront deposit, a good faith deposit for third parties, and ours are always reasonable. So, and borrowers expect that. I mean, we're not doing 1 to 4 family kind of stuff. I mean, our average loan size last year was over $10 million. So, I mean, our smallest was 3, our biggest was 33, I think. So
Right.
we tend to work with sophisticated borrowers that understand the markets that they're in and what's required. So that's normally not an issue. I'd say kind of biggest hang ups are really just a big hang up today is valuation. Somebody's waiving an appraisal from 2023 that has a bunch of comps from 2021 when interest rates were half of what they are today on the perm side. And, a lot of times values just don't tie out. And so, value is always an issue, but, we're looking at basis and we're looking at cash flow and we're looking at sponsorship. And those are the three things we're going to dig into.
Right. I think that's a fantastic response. So you're totally right with the valuations. Moving on. So obviously you're still 3 to 30 million on your loan amounts.
Yep.
Um,
Yep.
terms look good.
Yep. And this is not all set in stone, but this is, general, I would say.
Right, right, right. Setting expectations with borrowers. You're not doing any 1 to 4s. Multifamily
Nope.
mixed use is still good.
Yep.
Do you have a limit on whether there needs to be 50% residential or 50% commercial on a mixed use asset, or does it not matter?
It doesn't matter to me.
What about mobile home parks?
Yeah. Yeah. I'm actually looking at one right now.
Okay. Oh, I think we lost you. Maybe it
Yeah.
was
I just
him.
I paused you for 1 second there. Can you give me one? Can you give me 1 sec? I'm just going to move locations really quick because I had to
Yeah,
swing home for a second.
yeah.
1 sec. All right. Sorry about that.
It's totally fine.
You're gonna see my face in a second. Ah, we were at that Miami conference and everybody's playing catch up, and me included, from being gone for 3 days. So I apologize for that.
Oh, don't worry about it. We'll either chop this up or post as is. Not a big deal.
Do I still have you?
I'm still here.
Okay, cool.
Cool. I don't see your visual though, just so you know. There you are.
Yeah, get me driving.
I got that sunroof looking good.
There
Okay.
you go.
Okay. Everything else looks the same though. You're still doing motels, hotels, as long as they're flagship, right? Or
Yep. Yeah, a flagged hotel. Like we're typically not lending on hotels that are an independent hotel. Most all of what we're doing is what I would call flagged hotels with national flags. So Milton or Hilton, Marriott, we'll lend on a Baymont or a Sonesta, something like that. But we're typically not lending on, a 25 room without a flag.
yep, all good. And I think everything else looks good. Well, Brent, I appreciate your time today. Of course, as always, you're always fantastic. And I'm sure that you're going to get some responses from this video. This one's going to go up on YouTube, Brent, so to the main channel. And if you get anybody that comes through and says, "Hey, I'm with New Finance," I'd love to know, just so we, want to make sure we're tracking and making sure that you're getting a lot of business and give us some feedback too on those inquiries. All right.
Yeah, absolutely. I'll reach out. I'll make sure I CC or BCC you back on anything that I respond to. And yeah, we appreciate the business. So always nice to connect. And I'd say have anybody reach out on anything that they think may be a fit. We'd rather see more deals than less deals from your group. So looking forward to getting something done this year.
Awesome. All right. Take care, Brent. God bless you, man.
Okay. All right. You too. Take care. Bye bye.
Bye.